With recent news regarding the record high in credit card debts, it's a very big concern. This shows that there are people who might be taking the seriousness of credit card debts lightly. Credit card debts are not only expensive, but it can potentially disrupt your life if you're not careful with it. So for this video, it's slightly different as it's more personal in regards to my own opinion rather than just analyzing on company. We'll talk about the different types of debts and how credit cards can harm or benefit you. Before we go and talk about credit card debts, I would like to give a brief explanation of good and bad debts. Not all debts are bad as long as you are able to earn higher returns from those debts taken. One example is the HDB loan, which is priced at 2.6% per annum. If you can invest the money and get a higher return, then it makes sense to slowly pay down the HDB loan. Vice versa for bad debts. One of the bad debts will definitely be credit card debts. This is because they charge an extraordinary rate of 27.8% per annum. To make things worse, if you do not pay the minimum amount or forget to pay, their interest charges can go up to 30.8% and an additional $100 of late fees. So you might wonder, why do banks charge such an extraordinary interest on credit card debts? It's because banks consider this category of loans to be very high risk lending. The higher the risk, the higher the return they expect. Some loans can use assets to stake as collaterals, which are assets that the banks can take from you in the event you cannot pay back the loan. For credit cards, since there are no collaterals, the banks are taking the risk to allow you to take on the loans that they do not know that if you can pay them back in the future. That is why they charge such a high fee. On top of the high interest for credit card loans, they are actually compounded on a daily basis. This means that instead of just 30.8% per annum, we can find out that the effective interest rate that was compounded daily comes to about 35.8% every month. So this means that if person A took on $1,000 of credit card loan, in a year's time, the person will have owed the bank $1,000 plus $349 of interest and an additional $1,200 of late charges if you consider it every month. Of course, this is just an example, but you can see from this on how expensive it can be or how exponential the amount can get if you are not careful with these credit card loans. That is why when we use credit card, it's very important to remind ourselves time and time again to check on the billings to ensure that we pay them on time. One of the ways is to check with the banks and set all your credit card statement to be charged on the same day so that it's easier for you to track. This will ensure that you pay them on time. Alternatively, you can also set gyro payment if you have the bank account of the credit card. So this will ensure that you do not forget to pay your credit card bills. Another factor that might be contributing to overspending is buy now, pay later. Previously, there was a popular video from CNA regarding this topic and how young adults are actually getting into debts early on. BNPL can be beneficial because it helps to split your big purchases into 3 or 6 months separate payments. This can benefit those who knows how to utilize their money and pay back rather than paying straight up the full sum. However, the problem comes when the person are tempted to spend more because they see their bills being split into smaller payments. This results in them overspending and getting into unnecessary debts similar to credit card debts. Credit cards can also benefit us greatly if we know how to use them correctly. There are miles card and cashback cards which can give 2 to 8% return depending on the type of cards that we use. Moreover, there are also promotional offers that you can get with the credit cards that can save a lot of money. One of the examples is the Maybank Family and Friends card which I got recently as it gives 8% cashback on certain categories spent that I usually do. I also managed to get a Samsonite luggage that is worth $570 because of the promotion. Mileage wise, I have been using the Citi Rewards card with Instagram Amaze which can earn up to 4 miles per dollar. This has allowed me to accumulate lots of mileage which can be used to redeem flights for overseas. Of course, to utilize all the credit cards benefit fully, you will have to do your due diligence and not to get into credit card debts. For higher cashback or miles, there are always conditions that needs to be met. For example, Maybank Family and Friends card gives 8% cashback depending on what categories you choose, while Citi Rewards cards gives 4 miles per dollar for the first $1,000 every month spent. However, even for Citi Rewards, some categories such as travel, which includes airplane tickets or hotels, will not allow you to get 4 miles per dollar. There are also basic credit cards such as DBS Altitude, which gives 1.3 miles per dollar, and Citi Cashback Card that gives 1.6 cashback on all spending. These are the types of cards that gives lesser rewards, but these are also the types of cards that requires lesser monitorings. So what can we conclude from this video? First, not all debts are bad. Good debts are those that have interest payment lower than the returns that you can generate from the cash taken. So unless you can confidently get a 35% return, then you should never ever get credit card debts. The second point is to always spend within your means. I cannot emphasize this enough, as this is the main point that will lead to all the debts if you are not careful. It's very important to know how to manage your finances even with higher salary. If you're earning more but you're spending more as well, this would mean that your savings rate would not actually go up. But in my opinion, it's always important to save when you can so that you have enough funds in the event if you're fired from your job. Having a decent amount saved up, you can fire the boss rather than fearing that the boss will fire you. And the last point is that never ever get into credit card debts. I cannot emphasize this enough. If you know that you are a person who is always tempted to overspend, then I feel that it's not worth it for you to use the buy now pay later or credit cards. The risk to reward will definitely not be in your favor. I feel that the best option for you will be to use cash or debit cards instead to save you from the trouble of doing all the monitorings. Thank you so much for watching. I hope you've enjoyed this video. Please support the channel by hitting the like, subscribe, and comment if you like this type of content as well. You can also watch my other videos where I talk about Singapore REITs and Singapore banks. Thank you, and I'll see you in the next video.